These are called the Trump accounts. This is, I think, a pretty powerful tool. Jeff, this is why we wanted to leave time, so I'll be quiet. Go.
Yeah. Well, no, this again, another component of the One Big Beautiful Bill Act created a new tax advantage savings and investment account for children called the Trump account. Now, again, you may be saying, well, I don't necessarily have any children, or I don't have grandchildren, or whatever it might be, so this doesn't really apply to me. I disagree. I think this is something that everybody, regardless of what phase of life that you're in right now, you need to be aware of these, because these accounts are an option even for estate planning. These are options for, they can be contributed to by anybody, by an employer. This could be a new employer benefit offered to employees. Well, they'll throw some money into a Trump account for an employee's children. So this is a very interesting account, but I want to point out a couple things too. First off, let's talk about what the account does. They're initially eligible for after-tax contributions. So these are not pre-tax, they're not retirement savings accounts. They're after-tax contributions, but you can do up to $5,000 a year until the beneficiary reaches age 18, all right? Now, with an IRA, the earnings then grow tax-free. So if you initially put in $5,000 and over the next several years it grows, you don't owe taxes each year on that growth. It's allowed to grow tax-free. That's powerful, powerful growth over time. Withdrawals are generally prohibited until the beneficiary reaches age 18, but at that point, they need to be converted to an IRA for that individual, for that child, and the IRA withdrawals rules will apply. So there are strings attached, and you can pay penalties if you take it out at that point in time. But it's like a 529 plan, an education savings account. The beneficiary doesn't need to have earned income. So in other words, this $5,000 can start going in to an account for someone that's just born, that 1 year old, 2 years old, whatever. You don't have to have earned income to make a contribution, but nearly anyone can contribute to that account. Again, it can be relatives, it could be friends, it can be employers. I mean, it's a very wide open contribution restriction. There's no requirement that the proceeds be used for educational expenses or any other purpose. So these do differ from your educational savings plan, the 529s. Contributions will generally be made with after-tax dollars, which means there is no tax deduction for the contributions, but any potential appreciation or earnings within the account grow tax-free. So we've set the groundwork now. You've got a pretty powerful account here where you can make contributions and it can grow tax-deferred over time. So jump to the next page here. Now, almost anyone can contribute to these Trump accounts: parents, grandparents, family members, friends, employers, even nonprofits, okay? Unlike other tax advantage retirement accounts, these accounts have no earned income requirement. Just kind of stressing that point, because it is different. An IRA account, a traditional IRA or a Roth IRA, you have to earn money first before you can make that contribution. This removes that restriction and gives an opportunity. So you can contribute until the beneficiary of the account turns 18. Maximum amount per year is $5,000. But it is indexed to inflation, so it is going to go up every year. There'll be a little bump in that. Employers can contribute $2,500 to the child of an employee's account, tax-free each year. Again, this is where we get to where we don't have all the answers yet, because we're still sorting this out. It appears that employer contributions are included in the overall $5,000 limit. However, we need some guidance from the IRS on this. Local, state, and federal governments, as well as charities, can also contribute tax-free to a child's account, and those don't count to the $5,000 annual limit. So we've already started to see some, Michael Dell, who started Dell Computers, has already announced a $6.25 billion gift
to fund this.
And he's going to start putting $250 or $500 into accounts of children who can open these accounts that are not yet 18 years old. So it's incredible, really. And I think that it's anticipated that there'll be a lot more follow-up to that. Now, this is where it starts. It's not all been fleshed out entirely yet. Trump accounts will become available in 2026. So they're not even yet in existence, but starting with the new year, they're supposed to be. but the first contribution to the account can't be made until after July 4th of 2026. And we're not even sure yet exactly who will open the account or where it will be held. Yes.
Will it be held at a government level? Will it be held at at a level like an IRA where an advisor can help you open it up? That is unclear. Who will be the custodian of the money? Unclear, and you did mention here.
Well, this is just a little extra kick because this is something on top of it. If you've got a grandchild or a child that's born between January 1st of 2025 and December 31st, of 2028, there's a federal grant there of $1,000 to help seed these accounts. So it doesn't apply to everybody, but keep that in mind. It's an important point. Now, the next step, I thought I would kind of try to sum this up. You can go to the next slide there.
Thank you.
Yeah. Well, I just thought how this, maybe to try to illustrate how valuable these accounts could potentially be over the course of a child's lifetime, okay? Some families may choose to use Trump accounts as part of their estate planning strategy, okay? So we're not talking, this can apply to entire families, the way estate planning is handled, the way wealth is passed on to the next generation. Accounts could give parents or grandparents a place to transfer wealth from their taxable estate while giving the child a huge boost in retirement savings. So let's look at what that really means, okay? This is an example. A family, let's say a family is financially able to contribute to and invest the full $5,000 in a Trump account for the entire 18 years. A newborn child, a grandchild, child, whatever it might be. Yeah, adjusted, we're going to adjust that.
Increases.
Yes, and it does increase about a 2.3% inflation rate per year. So this is going to go up every year, the 5,000. Assuming a reasonable growth rate of 6%, by age 18, that child's account would hold around 191,000 in assets. 191,000, that's a good start there. It's about 108 of that is after-tax contributions, and then about 83,000 in investment gains. So that's powerful. Now that child hits age 18. At that point, the beneficiary can convert it. The child, yes, can convert the account to a traditional IRA. And then it can continue to accumulate potential gains on a tax-free basis. Now, let's say the kid's just getting started. It's now his IRA or her IRA. They don't have the ability right away to make those $5,000 contributions. They just got started working, or maybe they're working at work and they've got the 401k, so they're contributing to that. We can, even if the beneficiary made no additional contributions to the account, by the time they reach age 60, we're not talking 73 or age 60, the account could be worth more than $2.2 million.
The possibilities of this are huge. And I know we're running very late on time here, but the other thing too is that when you think about estate planning, I'm thinking about clients that have non-qualified accounts. Let's just say they might have NVIDIA that has a huge gain in it.
Yes.
Right? That's what you could do, an in-kind transfer from that account to this. And all of a sudden you bring your taxable estate or your taxes down.
Well, I think you're still going to be limited to the
5,000.
Yeah, to the 5,000.
But at least it's 5,000 of gain out of the taxable estate of mom, dad.
That's right.
So this is, the groundwork is here because this walks and smells a little bit like a non-deductible IRA, right? But there's a few more bells and whistles to it. So there's some questions to be asked, but boy, it's huge.